Hello everyone, I'm Tom with Stocks Navigator, and to kit up for the year 2023, a lot of people ask me, is this the time to buy the dip? Why or why not? So I'm going to make this YouTube video so that we can show you where we are and what we're supposed to do to kit up for the year 2023. As you know that when the people are talking about the market, look at the big picture. People using S&P 500, which is the SPX chart, as the stock market index. They tracking the stock performance of the 500 large companies listed in the stock exchange in the United States. So SPX is one of the best indicators to evaluate the current state of the market. So as you can see, the year 2022 was a very choppy for the market, especially for the last half of the year. The SPX had gave out quite a range from 3,500 at the low end to 4,300 at the high end. However, the mid of this range had been between 3,700 and 4,100, with overshot in either direction, but did not last for a long run. So at this moment, we don't have any clear confirmation. It seems likely that this range bound action will continue to beginning of the year 2023 for a variety of reasons in both of technical and fundamental analysis, because the interest rate continue to be uncertain. If the Fed continue to raise the interest rate, and the geopolitical tension between Ukraine and Russia, it cause a lot of risk to the market. So in order to do that, we will look at a bunch of charts like the S&P 500, the volatility index, the interest rate, and a couple of big name stocks like Apple, Tesla, so you can see how they are leading the market too. Okay, so let's start with the chart of the S&P 500. As you can see, the S&P 500, when the COVID-19, they push it back down, but after that they be able to manage and put it back up to the uptrend and continue with the high-low manner. So the market have a good run until the end of 2021, and after that they will start making low high. So every time the market puts it back up, they push it back down, put it back up, push it back down. And the last time we tried to put it back up here, and we still failed to punch through it. So at this moment, market pull back down. So it's very important for the next couple of weeks. We can see that the market be able to find a support to break out the downtrend line to continue to push it back up, or the market will continue to go deeper. So in order to do that, we take a look on the short term since beginning of the year 2021 to the end of the year 2022. We can see that every time the market put back down, people buy back up to the top. So they continue to buy in the dip and sell the dip in the downtrend manner. So right now, at this moment, we have a strong support at this level here. If the market be able to push it back up and punch through the downtrend line, then we have a chance for the S&P 500 to continue to put it higher. But if we fail to do so, we are still in a choppy sideways, no man's land. Okay, so we have to be patient until they lay out and give you a clear trend direction. So if you look at the volatility index, which it measures fear and risk of the investor, as you can see that every single time the VIX should be back up, they to the upper bound, they pull back down to the lower bound. So right now the VIX at the lower bound. So if they put it back up, then the market will be more trouble. So look at the 10-year Treasury note, and you can see that they are still in the uptrend manner. If they're able to hold on here, if they punch to the 39.22, they have a chance to put it back up to upper bound here. But if they fail, they need to break out the support line here in order to control the inflation, and the market they have chance. The technology stock will be able to put it back up. Otherwise, you can see a lot of technology stock still have a problem right now. So as you can see, the SPX, okay, they seem to bouncing up the major retracement zone, and the VIX is currently in the low bound in the buy zone. If it's going up, it could be signal the S&P 500 can continue to go lower. But if the VIX stay in the low bound, then SPX can steadily climb up, but we don't have the clear confirmation at this moment yet. So again, uncertainty in the high, very high in the market condition right now. We need to be patient and wait for the opportunity to come to you. So the next chart, I will show you how the VIX and the S&P 500 for the last year, as you can see. So basically in the last 6 months, you can see when the VIX put it back up, the S&P 500 going down. When the VIX coming down, the S&P 500 go up. When the VIX goes up, S&P 500 going down, and the VIX going down, 500 go up. So they still stuck at the level of the sell zone and the buy zone between the VIX and the SPX. So the question right here is, we have a two chart in the middle of nowhere. So if the VIX continue to put it back up in the next couple of days, and then as you can see more downturn for the market. If the VIX can hold up here and pull back down, then the S&P 500 can go up. So the two charts here side by side, you can see how they are related and they are in opposite direction. So at least they give you a guide where they are heading to. Now let's take a look on the Apple stock. Apple stock, a lot of people ask me about Apple stock. As you know, Apple stock is the key component of the S&P 500. If the Apple continue to go down, it's very difficult for the S&P 500 to go up. However, the Apple continue to put it back down. As you can see, we have a strong support in this area here. If Apple can hold on to this level, and we have a short-term rebound, but the trend is still in a low high, low low manner. So we have to wait for Apple to stabilize for the S&P 500 to put it back up. And the next chart is the Tesla. It's one of the strong components for the technology stock. And Tesla is continue to put it back down. However, Tesla is very close to the support area here. If Tesla be able to follow support, it gives you the reversal formation, and the Tesla can have a chance to bow to the upside also. Okay, so so the question here is it the time to buy the dip? So at this moment, you can see that the technology, the consumer cycle, the real estate, and the communication services have been remain in the area underway, or we should avoid at the beginning of 2023. You should look at those sectors like basic material, industrial, and healthcare. They have a very positive attention, or have been improving over the last quarter. And the financial have been a difficult sector to navigate this year, as there have been both positive and negative. However, the bias is highly negative from the technical perspective for the sector, but for the fundamental perspective, many of the banks should be able to take advantage of the higher interest rate if the economy does not fall apart. So the bank could be an area to watch as the leading indicator of the economic condition for the future. So while the broad market is still not the greatest shape right now, but there are plenty of opportunity for those willing to reel out to the area for the trend and patiently waiting for opportunity. We have a lot of stocks like Apple, Amazon, Tesla, and at this moment you can focus on the strong sector and like healthcare, like Merck or Eli Lilly, okay, MRK and LY, for example. So the short-term buy are still okay with the proper risk management and confirmation as such in the expert trader program. So at this moment, we should stay nimble and safe in the sideways market condition. Don't try to hold on to the market until if they hit to the level of resistance. We should take a profit until they give you a clear direction. All right. So in conclusion, in the universal truth that the price does not go up or down forever. This is why everyone needs to learn how to swing trade, not buy and hold, no exception. If you think the financial advisor is a good swing trader, you may be unpleasantly surprised. So to correctly learn how to swing trade and formulate a solid trading plan, it is important to obtain the right education. The expert trader course offered by Stocks Navigators will offer just for that, and so that you can take in control of your financial future. So you can watch the webinar, follow the link below. So if you like what I'm doing for you, give me the thumb up, and if you want to learn more and check our website, All right, so thank you very much for watching, and then I will see you on the next video. Take care, everyone.